Welcome back to another edition of How's the Rutherford County Real Estate Market. Hey, y'all, we got some really interesting information this week. We've got your recap of the August numbers and a couple of interesting trends there. Plus, we have our normal weekly information, along with some really interesting mortgage rate information as well. You may or may not have heard. So let's jump right into it. Let me minimize my screen here. And here is our normal chart that we look at. If you look here, we got 1,553 available listings at the moment. That is normal right now. That's 9 weeks in a row that we've been right on either side of that. So it just really seems like right now our inventory is leveled out. So anybody who's expecting a big influx, we're not seeing that. Anybody who's expecting it all to be eaten up, we're not seeing that either. So 9 weeks is a pretty long time in a market like this. 177 new listings this week. So that's actually quite a few new listings. And we'll look at that here in a minute. Pendings, 84. You'll see when we get into our charts, that's down a little bit. Closed is 73. I don't read a whole lot into that. This is the first week of the month, so not nearly as many things. It's hard to get a gauge the first week of the month. A lot of things happen the second half of the month. We have closed 1,427 units over the past 3 months. We are at 3.26 months supply of inventory. I will remind you, that is a seller's market. It does not feel that way. I know it. You don't have to tell me that. I know. But 3.2 months supply is a seller's market. Interestingly enough, if you want to look up here, look at the 700s. 2.4 months supply. It just seems like about 6 months ago, we had way too much inventory in the 700s. So that's very interesting right there. That is actually, from an inventory standpoint, the tightest price range we have. So what a change there. Everything is basically at 5 months or below. I will remind you, 6 months of inventory is considered a balanced market. So we still are in a buyer's market. If you look at the percentages, real low as to what was pended this week and what closed this week because our new listings were up and our pendings were down. So let's go look at that right now. Let me jump over to these charts here. Our new listings charts, let me see if I can't get me out of the way. The light blue line is this year. The dark blue line is last year. And if you'll notice, for the past 3 weeks, we've had less new listings come on the market than we have last year. But this year, it soared to 177 new listings. We were at 111 last week. So that's a huge increase. Not really sure what's going on there at this moment. And it's only 1 week. Anytime I see 1 week of anything, I just really don't give it a whole lot of thought, quite frankly. It's the trends that we're looking for. Our pending chart, if you notice, pendings were way down. We had 3 consecutive weeks where pendings were up. So we had 3 weeks where pendings were up and 3 weeks where new listings were down. This week, it's just the reverse. So we had 84 new pendings this week versus 102 this time last year. Last week we were at 114. So month supply, we stayed dead even at 3.26 months of supply. If you look the past few weeks, we've been somewhere between 3.18 and 3.26. Just, quite frankly, just level. I mean, there's just not a whole lot to talk about with this information, except markets like steadiness. They don't like a bunch of up and down. So that's actually really good for the market. If you'll look at this again, we're just leveling off here for the past 9 weeks now, around 1,550 available units. The number of homes that went under contract in relation to the number of homes that are on the market actually dropped quite a bit from last week, but also it's kind of the same trend we saw this time last year. So, again, just kind of where we expect it right now. Not seeing anything that's really breaking out with this information. We've got some other information, though, that we do want to talk about that I think is really neat and important. First of all, let's talk about August. Okay, so I want to finish up with August. Monthly closing charts. There's two ways to look at it. So you're probably going to see two different numbers when I look at this. But our monthly closings for this month were 482. That was compared to 527 last week or last month. So a huge drop. But what I like to do is go back and look at last year. Where were we last year? This year, 482. Last year, for August, we were at 513. So that's about a, what is that, 31 unit drop off? That's quite a significant drop off. Especially when you look at last year, we had 516 sales in July versus 527. That's a real close number to each other. So definitely saw a drop off in August in sales. But the interesting thing about it is, if you look at the new under contract for Rutherford County, we are up 7% on pendings over August of last year. And this shows over here. So we had 486 homes go under contract in August versus 453 last year and 412 in 2023. So this is actually showing quite a bit of increase right here. And we'll look at that in a minute in another way too. But let me jump on over. Let's finish up August and see what happened with August. Right now, 1,500. This says 1,564 listings because I'm including auctions in on this. My other data, I don't. So that just tells me there's about 10 or 12 auctions in the MLS. But whenever you look at the under contract, there's 184 under contract, still showing the houses, and 239 under contract, not showing houses. But here's really what I want to look at. Out of the 482 closed properties in August, the average price per square foot, $230 per square foot, average price. The average list price was $495,000. The average sales price was $485,000. So list to sell ratio was 98.75%. Now, that does not take into account any concessions that the seller has made. That is strictly sales price to sales price. Also, days on the market, 29 days. That is for those that went under contract, okay? There's a big distinction between what went under contract and what's... see, if you look out here, the average actives are on the market for 57 days. But the active, or the average for what closed is 29 days. That tells me that the people who price their properties correctly, they present them correctly, and they promote them correctly, actually went under contract fairly quickly. And what you see here with these up here that are the actives are the ones that are still stuck in the COVID years, thinking that they can ask whatever they want to, or they can present it however they want to. And whenever you do that, your house sits on the market. So that's just the way it goes. So that is your wrap up for August of 2025. Now, let's talk bonds and mortgage rates. I know, exciting stuff, right? It's very exciting this week. We're going to jump over here, and what you're going to see, I put a 1 month on the 10-year Treasury. All right, 10-year Treasury is very important to us because what you can do is you can take the 10-year Treasury and add what they call the spread, and that's kind of the risk factor that lenders put on on the mortgages, and you really can come up with a mortgage price, so, or the mortgage rate. For months, we have struggled to get below 4.2 on the 10-year Treasury. We would get down close to 4.2 and jump up. And whenever you would look at an average spread somewhere around 2.4, 2.5, you had 4.2 plus 2.5, let's say, that's 6.7. That's about where interest rates were, mortgage rates were. Well, what we have seen is the spread come down a little bit. We've also seen the 10-year Treasury drop a bunch. This really happened. if you'll look at this, this is the last month, and you can see how it just took a nosedive here. Just to give you a reference, this is the last year. This is the lowest point it's been in quite a while. We did see a drop like this in April, and then you have to go all the way back to right before the election before you saw anything, bigger drop than this. So, but if you look at the past 5 days, what you're going to see here is that we were just kind of going along around here, around 4.3 or so, maybe 4.2, whatever. And then all of a sudden, we got into this drop where we were hitting real close to 4.2. And it's like, are we going to break? Are we going to break? Because it's hard to break past some of those points. And we did break past that. If you look here on the 4th, which should have been Thursday, it closed at 4.19. So that was huge. Friday, the jobs reports came out. And quite frankly, there were not that many jobs that were created. It wasn't great news, but mortgage rates love bad news. So what happened is you saw this 10-year Treasury drop down, and whenever you look at it here, it actually closed just above 4. It was 4.07. So that's a huge drop. That's nearly a 0.2% drop. Just in 2 days. I mean, that doesn't happen often. So what did that do to 30-year fixed mortgages? Well, as of Thursday, and this only goes back to Thursday, and remember, we had the largest drop on Friday, but as of Thursday, the average mortgage rate was at 6.5%. Now, I know things are sent out, and you'll see, you could get a FH or a VA loan right now, probably around 6, maybe a little less, maybe a little more. That's the national average. It's all, mortgage rates are all dependent upon your credit. They're dependent upon, what the rates are doing, how much you're putting down. There's all sorts of things, the type of mortgage you get. But just looking at a 30-year fix, we at least get a trend on it. And if you go back to May right here, we were at 6.89. So we have seen nearly a 0.4% drop since May. And a lot of this just happened just recently, and I think on Monday, I think it's going to be even lower. If you are in the process of purchasing a home, you need to be talking with your lender. As a matter of fact, if you're looking at this over the weekend, you need to go ahead and email your lender now, or you need to certainly do it first thing Monday morning. See how this may impact you, because this is huge, and it's trending in the correct direction. I had someone ask me the other day, do I think we'll get back down in the 4s? Anything's possible. I'm not seeing that anytime soon, though. I can see us getting right below 6 and hovering around there somewhere on either side of 6. And that certainly is going to help out with affordability. I know it's still tough with the way home prices are, but we're also seeing sellers get a little bit more negotiable on that. So very important stuff about mortgage rates. Let's go back and look at the trends real quick. I showed you about the new under contract here for August. We are up, pendings are up 7%. So mortgage rates are coming down, pendings are going up. It's going to be interesting to see what the next few weeks carry for us. Now, here's something that I like using as well to help with some trends. This data runs about 30 days behind, so sometimes it's hard for me to get the latest and greatest data, so I don't use this as often just for that reason, but it's very good data. So this is sold versus pended. And all these start in July of 2023 and go to July of 2025. Remember, we're over 30 days behind, so I can't quite get into August yet. But if you notice the red line, our pendings right here at the end are really shooting up right here, even more so than what we saw last year at this time. So it's going to be interesting. I mean, normally we see a little bit of a drop off here. This is a pretty steep increase, though. So I'm really keeping an eye on that. I think it's just, again, very interesting. Average price per square foot. Again, we saw $230 right here in June, and actually in August we saw it too. July it was down just a little bit here. Days on the market versus sold, original sales price. This is the original sales price, listing price up here, and you can kind of see what percentage we're getting. And we've been below 100, and you see a little fluctuation here, but most things are selling somewhere between 97 and 99% of list price. And then the average days on the market, you could see where we really peaked right here in February and March. It's a little bit lower right now, but also you can finagle those a little bit as a real estate agent. So you really have to be a little bit careful with that. Obviously the months of inventory, very interesting. This runs on a 6-month scale. I'd put mine on a 3-month scale, but you can see right here at the beginning of the year where we really peaked close to 5-month supply, and then we've slowly worked our way down. This has us at about where I've got us right now. This actually is showing just right below 3% or 3 months. Actually, that's 3.4. Sorry, I was misreading that. 3.4. So real close to what I have us at as well. Let me pull up. To me, this is just interesting. Lighter green is for sale properties, and you can see the number has increased over the past couple of years. You can see where sales have kind of just been seasonally steady, and pendings. Again, the pending right here at 548 is probably the highest number we've seen in a while. So there is something to be said about some optimism right there with the pending. So that's what I've got for you right now. This is this week's Rutherford County real estate market. If you have any questions, please reach out to me. I'm more than happy to put any data out here that you would like. It's just fun for me to look at this. Please make sure you subscribe to this channel. Subscribing actually helps us out a lot, and our channel has been growing, and we thank you for that. And again, if you have any questions, please let me know. I'm John Turner. I'm with the Turner Victory team at Onward Real Estate, and we bring this to you every week. And if there's any real estate needs that you have, please let myself know, let my team know. We love taking this information and helping decipher it so it will help you negotiate whether you're a buyer or a seller, and really it helps us understand the market and helps you get where you want to go. So appreciate you tuning in, and we'll see you next week. But till then, I hope you make it a great week. Thank you.